The world is reeling from the coronavirus shock right now. Earlier this week, Goldman cut China's GDP forecast for Q1. Instead of growing by 2.5% as expected earlier, Goldman expects China to contract by 9%. According to JP Morgan, even the American economy is not going to do well. It has projected the US economy to shrink by 4% in Q1 and by a whopping 14% in Q2. Experts contend that the Indian economy will be bruised a bit in January to March, but will face a worse situation in the April to June quarter. What is the economic impact of COVID-19 pandemic going to be? Let us take a deep dive with AKB. Is it fair to say that the COVID-19 pandemic represents the greatest threat to the global and Indian economy in decades?
To say that it is the greatest threat will not be an exaggeration, because you have to look at the outbreak of coronavirus or COVID-19 in the context of the overall situation that prevails in the world and the Indian economy. Why I say both the current context of the world and the Indian economy is because here was a global economy which was already in the early stages of a kind of a slowdown, and the various countries and their central banks were beginning to explore various options to revive demand by fiscal as well as monetary policy measures. In India, we were hoping that the slowdown phase was probably getting over and India might get back its earlier phase of relatively higher growth. The coronavirus has come at a time when it is going to test not only particularly the world's capacity to deal with a pandemic of this nature. The healthcare infrastructure may be ready to tackle the traditional diseases, but a disease like the coronavirus, a pandemic as the World Health Organization has described it, requires different set of preparations, and this will test the ability and the capacity of the world, and particularly in India, where our testing capacity of cases who are been afflicted by coronavirus is severely limited. So therefore, this is undoubtedly an unusual moment in India's health history as well as economic history.
We have seen entire countries enter lockdown. The economic giant that China has been under lockdown for some time. This has resulted in unprecedented disruption of global supply chains. Are we going to see the impact of this disruption in this quarter?
I think you will see disruption in this quarter's GDP numbers. The trade figures are already giving an early signal. You will see how the airlines have already pressed the panic button. The hospitality industry is complaining about business losses. If you look at whether it is the Indian economy, the Indian sectors, or the global economies, you are seeing the overall impact of coronavirus to be impacting the current quarter, which is the January to March 2020, will naturally see a drop, as you had indicated, that a lot of people are fearing some sort of a contraction. The US President, Mr. Donald Trump, has already said that this is the beginning of an economic recession.
The COVID-19 pandemic has coincided with the biggest fall in crude oil prices in 3 decades. Can these all-time low oil prices help cushion the impact of the pandemic?
I'm glad you have raised the issue about crude oil, and this is the irony of coronavirus. The irony of coronavirus is that it has come at a time when crude oil prices are coming down. Now, remember, the two are related. The crude oil prices have dropped also because of coronavirus. is because of fears of economic slowdown and because of the coronavirus threat impinging on economic growth that the OPEC and Russia were engaged in talks to bring down their production and cut production. And it is a standoff between Saudi Arabia and Russia in particular on the cut in oil production that the sudden decision by Saudi Arabia to increase oil production has led to a sharp drop in international crude oil prices. Now, in a normal situation, a drop in crude oil prices would have brought cheer to the global economy because the users of oil would have suddenly seen more margins and greater profitability. Now, it has come, this crude oil price decline has come at a time when demand is deficient. For example, take the aviation sector. Now, they are not even flying their normal quota of flights. Now, if the crude oil prices were down and if demand had been there, then the aviation sector would have actually seen huge profits because with low crude oil prices, aviation sector would have seen better days. Now, so the point I'm making is that the crude oil price drop will actually not ameliorate the impact of coronavirus, but actually will deepen the problems that coronavirus has already inflicted on the global economy as well as the Indian economy.
So far, India has not seen a high number of infections as far as coronavirus pandemic goes. Most major companies across the country have asked employees to work from home or are working with reduced numbers in offices. With tourist visas cancelled, the inflow of foreign tourists has come to a complete halt, and that has come as a body blow for the tourism and civil aviation sectors and for hotel business. How badly has the pandemic hurt the Indian economy?
Well, it is quite serious as of now. I think the expectations were that economic growth in the first quarter should have been 4.6%. First quarter meaning of the calendar year, which is January to March, should have been 4.6%. If the earlier estimate of the full year 5% growth target had to be achieved. Now, there are serious doubts about whether the 4.6% growth can be achieved. And going forward, there are clear estimates and fears that the earlier expectation of 6.5% growth rate will have to be brought down to a much more reasonable figure of maybe 5% or maybe even lower than what has been achieved in 2019-20. Now, look at trade. The February figure on exports have certainly given us some room for comfort in the sense that the exports have grown by 3%. But I think you have to look at the actual impact of exports will be seen in March. And on top of that, what you are seeing is that the pressure on government finances will be going up because with economy not growing that way, that fast, the tax collections will come down, and as a result of which the government finances will be under strain. And this is the time when there will be demands made on the government to come out with some sort of a stimulus measure. In 2008, when the government had to come out with a stimulus measure to respond to the global financial meltdown, what the government did was cut taxes, duties, and increase expenditure. But then it had the headroom of making that stimulus because the fiscal deficit at that time in 2007-8 was only 2.7% of GDP. But today, you don't have that headroom. Your fiscal deficit is already threatening to touch 4%. By many estimates, it has actually crossed 4.5% if you take into account all the extra budget borrowings and unpaid dues. So therefore, the headroom for the government to come out with a strong stimulus measure, which will be needed to revive demand in the wake of the coronavirus impact on the economy scope is very limited. So therefore, I consider the impact on the economy a little more serious than the kind of impact that we saw, whether it was in SARS in 2003 or whether it was 2008, the financial meltdown impact.
Supply chains are disrupted. We have already seen news about how the pharma sector in India may struggle without APIs coming in from China. How bad can it get for us, and what can the industry do?
Well, the industry will have to look for domestic alternatives. Remember, particularly in the pharmaceutical sector, India was a fairly vibrant sector producing its own APIs. So there is no reason why the domestic industry should actually get together and revisit those sectors, and if it can be helped in some way by a special line of credit or a special funding or a taxation benefit, because we do need alternative sources of these drugs and formulations, because to be dependent on one country or one sector in the current situation is not an advisable thing. And this is what I think is going to be the biggest takeaway of coronavirus, because coronavirus has forced companies, economies, governments across the world to start thinking local, because there are obvious downsides to a global supply chain-led economic growth, and the countries will start thinking whether there should be greater emphasis on local procurement of raw materials, local resources, and local employees, instead of relying on the economies of scale that earlier companies used to derive by a globalized global supply chain advantages.
The COVID-19 epidemic or pandemic has come as the third major shock to the Indian economy since November 2016. First, it was the demonetization shock that shaved off GDP growth in the country. This was followed by a messy GST that affected businesses and also tax collection. And now we have COVID-19. Can the Indian economy survive this third shock in a row?
I think it will be wrong to suggest that Indian economy cannot absorb this shock. I think the Indian economy will definitely be impacted hugely, but my sense is that it will be able to overcome the challenges, provided necessary policy support and measures are taken. I am not underestimating the impact of coronavirus or the third impact in a series in the last 4 years. But what I am also drawing your attention to is that coronavirus has come at a time when the government's finances are strained, when the financial sector, which could have been a great help in an economy which is slowing down and having an impact of coronavirus on growth, but our financial sector is not in the pink of health. It has got many problems yet to be sorted out. So therefore, the problem of coronavirus has got compounded and the challenges will be more. But I don't think that India and the Indian economy cannot withstand its onslaught.
The current financial year ends on 31st March 2020. This fiscal year saw the government breach its fiscal deficit targets, whose final numbers will be known to us in the coming months. We have seen that the union government has a massive hole in its revenue projections. With the coronavirus shock now, this is likely to continue the next year?
Well, to be honest with you, even if coronavirus had not struck the Indian health system and the Indian people, my sense was that these revenue projections were overstated. So even without coronavirus, the government's fiscal deficit, the headline number would have been met through extra budget borrowings or dipping into National Small Savings Fund, but the actual revenue projections, which indicate your true state of government finances, would have seen a huge shortfall. So with coronavirus, what you're going to see is a bigger shortfall. So, and also probably politically, the government will get an opportunity to put the blame on coronavirus and say the coronavirus has come, and let us admit that yes, the government finances are in trouble and the fiscal deficit has widened further. Now, next year, the projections and the numbers are based on a scenario that did not incorporate the impact of coronavirus. So therefore, all those numbers will have to be revisited. The growth assumptions will have to be revisited. So therefore, the next year's budget numbers will also be impacted by the impact of coronavirus on the Indian economy.
How will that hurt the Indian government's programs and by extension the common man?
To some extent, I think the government's expenditure program will be impacted. I think the devolution of resources to the states, which the 15th Finance Commission is looking at, will be even more challenging. The 15th Finance Commission is supposed to come out with its report by end of October this year. My sense is that the Finance Commission members will have to once again revisit these numbers, because coronavirus is such a big event that it has introduced not just the GST uncertainty, but now it is a coronavirus uncertainty into India's economic growth numbers and therefore the revenue numbers. So the entire expenditure outlay program of the center, as well as the money that the center shares with the states, will have to be revisited, and therefore, to the extent that less money relative to what could have been available earlier before coronavirus, the project allocations and the common man, which used to enjoy and benefit from those programs, will have to take the hit.
A large part of the Indian economy is in the informal sector. A large number of Indians can't afford to work from homes, therefore. There is also what is known as the gig economy. How hard will it be for this part of the Indian economy to survive?
The gig economy will react to the coronavirus in two different ways. There are some parts of the economy which will probably benefit. For example, the delivery-based systems, the like food delivery companies or the goods and merchandise delivery companies. I'm referring to companies like Amazon or Swiggy or Zomato. I think that part of the business, the gig economy, people are not actually fearing any job losses. On the contrary, they might see some increase this thing. But the part of the gig economy which relies on cab sharing, the ride sharing business like Uber and Ola, that will definitely be impacted. But once the coronavirus impact is wears off, probably that gig economy will also come back to its original cycle. But remember that coronavirus is going to impact hugely on the way we live, the way we do our business, and the way we have our social interactions. So my sense is coronavirus may have an impact on the ride-sharing business and also the social habits and of traveling to places, seeing movies, cinemas in multiplexes, or going to malls. So income sources and the revenue sources from some parts of the gig economy will be impacted, whereas delivery-based businesses will actually see a bump.
A major reason for the economic slowdown that India was experiencing already was the fall in consumption. We also saw unemployment levels reach the highest levels in more than 4 decades. The government has been under pressure on both these things. How can we counter the negative impact of the pandemic on both consumption and employment generation?
I think the consumption side of the economy will have to be given a boost. There is need for revisiting the GST rate structure. Probably it is not a bad idea to look at the GST rates and see in what way the rates could be rationalized and then brought down to a lower level, maybe a three-rate structure in which the rates are lower and some rates may go up, but they will be at a certain level, maybe a low rate of 5% and a middle rate of 12% and a high rate of 18%. So if you have that kind of a scenario, yes, there will be a revenue shortfall, but that revenue shortfall may also give a boost to demand, and therefore once coronavirus impact is over, then will be the time to revive demand, and at that point in time I think a stimulus of that nature will be hugely useful, and that is something that the government will have to examine, even though it might mean these fiscal consolidation efforts will be undermined.
The stock markets have shed points like sweat in June. They've lost nearly 30% of their valuation. This has been a global rout. Where do you think the bottom lies?
Well, nobody knows what the bottom is going to be, but one thing is very clear, that what is happening right now in the markets is panic selling, and some operators may be taking advantage of this panic induced environment in the stock market. It's clearly these levels are not the real levels, do not reflect what is going to be the earnings prospect or the growth prospects of the economy. But what is clear is that it will be a long haul from going forward. The stock markets will take a long time, because it will take its own time to assess the impact of coronavirus on economic growth and economic growth patterns, and it's only then that the stock market can probably make a return journey to higher levels. But as I said, that this will be a long haul and no early recovery should be expected.
We will be back next week with another deep dive with AKB. Keep following us on businessstandard.com for more.